traders, and welcome back. Congratulations on completing the first section of the beginner course. I know I went over some of the basics and I hope you guys learned quite a bit. This is the most exciting part of the course, where I will be now introducing you guys to price action trading. In this whole second section, I'll be teaching you a lot about technical analysis, how to read charts. I'll show you some continuation patterns, reversals, and all of these strategies and techniques that I'll be introducing you guys to are used by world professional traders making high profitable trades every single day. And hopefully you guys really understand this course material. I'll take my time to really go through it so that you guys fully understand it, and I'll do my best not to bore you guys and just try to show you and teach you guys everything that is most important and what you really need to know. I know there's a lot of stuff out there that can be confusing for a lot of newcomers. I'll do my best to sort of explain and filter out all the stuff that you don't need, and just give you all of the good stuff that you do need to know. I don't want you guys learning any bad habits, so I'll teach you all of the good ways of trading at a very early stage. So congratulations again on making it to the second part of the beginner program. So now what I want to do is basically introduce you guys to candlestick analysis. So there's a website here, it's called Investopedia, and so you can go over to investopedia.com, and I'm just taking a look at this site because it has some good explanation as to what each individual candlestick means. It gives you the name and all that stuff, so you guys can go over to the site whenever you like and explore all of the different types of candlesticks and the names and get an understanding of what each of them represent, because it's good to understand them and see them in action, because then you can relate to some of the textbook stuff and see it practically and trade it accordingly. But just because it's like that in textbooks doesn't necessarily mean it's always going to be 100% accurate. So that's the difference between textbook trading and real actual trading. So use the textbook stuff wisely. Don't just strictly rely on it. Just for example, let me just pull this up again. I'll just go down to one of these candlesticks here. So this candle here it's called a hammer, and a hammer is an inverted hammer. Sorry, this is the inverted hammer and this is the hammer. A hammer is a reversal candlestick pattern that happens. So when the chart is in a bear trend and it comes to a bottom and we get this nice long wick to the downside, and then the candle is actually a bullish candle. So the white candles here are bull candles and the reds are the bear candles. So red is going down, down, down. And when we get this candle at the bottom where we get a nice long wick and then the body is actually a bullish candle, that typically means that this pair is either going to face a bottom, or we might actually get some sort of reversal or some sort of retracement in the short term. But just because we see a hammer doesn't necessarily mean it's always going to do that. Okay, so there's lots of different candlesticks that look like hammers. This is always a good practice to sort of look at some of the reversal patterns, some of the names of the candlesticks, and just go through the chart. I like to just scroll back in history and try to see if you can spot any of them. This is a really good practice. This is what I used to always do when I was starting out, and this is what I recommend to all of my students. Go back in time and see if you can spot a hammer, for example. Okay, so and a hammer doesn't necessarily have to be exactly like it looks like in the textbook either, guys. Like, it doesn't have to be exactly like this. Sometimes you'll see a little wick on the upside. Sometimes you'll even see the candle body. It's still a bearish, so in this case it would be black instead of white. It is definitely better to see a bullish hammer, which that's what this is here. I mean bullish in the sense where the candle body is white, so it's a bullish candle bullish hammer, excuse me. But even where we see black hammers still could give us a clue that we might see some sort of reversal. This actually here could be looked at as a hammer. We are looking at this on a 4-hour. Okay, and I also want to show you guys the difference between looking at candles on different time frames, and because just because this looks like a hammer on a 4-hour, we might see some sort of different candle pattern on the smaller time frames. Let's just go ahead and take a look at that and see what we can dig up here. So I'm just gonna insert a rectangle just right on top of this hammer here. Okay, and because what I want to do, I'm just gonna try this again, sorry about that. Okay, because what I want to do is just see what it looks like on smaller time frames. So there you go, right? So that's what on a 4-hour time frame, this is what a hammer looks like. Okay, or sorry, this is on a 1-hour. So this is what it looks like on a 1-hour. But if we switch over to a 4-hour, we get the hammer. Okay, now we also have the inverted hammer. Okay, which is where we get the wick to the upside, candle body on the downside. An inverted hammer is kind of similar to a shooting star, and I thought I just saw one. Where was it? Here, right over here. Okay, so we're getting this sort of uptrend, and then we get a shooting star. So we get the long wicks to the upside, candle body, different color. So it's a bearish candle to the downside, and it shoots it down. Okay, so guys, take your time going through Investopedia, understanding the different types of candlesticks. But what I'm going to do is just basically give you all of the candlesticks in a nutshell, so you don't have to remember all of the names. I'm just going to teach you what's most important. Okay, so what's most important about candlestick analysis is understanding the size of the candle bodies and understanding the wicks. Okay, so the candlesticks that have little short bodies and they're little, like these little guys here, this is called the Doji. Dojis mean indecision, so the market is unsure of whether it should go up or down. It's not really giving you much information. When we start to see candle bodies start to pick up in the size, it means that the momentum, like you can visually see the momentum is getting stronger and more aggressive, okay, in these candle bodies. And then, so for example, as we start to pick up this bullish momentum and we get shot down by this bearish candle here, okay, that's sort of signaling that this upswing here is about to stall out a bit, and so we get this little bit of profit taking mode. Okay, and you have to take into consideration it's all about market psychology, right? What is everyone looking at? So for example, if you entered a trade here based off of this Doji and there was a little indecision, just you could have thought, okay, we're getting this upswing and we're getting a little indecision happening here. This might be a good opportunity to go long and, place your stop loss down below here. If you did decide to get into a position here and you're holding on to it, who knows how much you're up at this point, but then you see this strong bearish candle wipe out this bullish candle. It's all just market psychology here, guys. Like, you might be a little concerned that this might continue to fall downwards, so you might close your position. And you know what? Other traders are doing the exact same thing. You can just imagine, like, if you're a big time trader and you made a trade down here and you closed it up, or your position's up here, and say you're up, $10 million, right? And so all of a sudden you get this red bearish candle, and instead of being up 10 million, well, now you're only up 6 million. So you're like, okay, forget this. I'm just going to close this position. And you know what? Other traders are doing the exact same thing. So this could be looked at as sort of like a little profit-taking mode. Like the bullish trend is still intact. It's just we get this little hiccup here, this little downswing, just based off, it could just be strictly profit-taking mode for a lot of firms, institutions. So that's something to think about. All of this, reading candlestick analysis is all about just understanding the psychology of it. Okay, so like, when we see a lot of wicks to the downside, sometimes, we get movement to the upside. Like we're getting, like, price action wanted to fall and was unable to hold on to those gains, and it continued to move upwards. So like, we're getting wicks to the upside. So sometimes that's a good practice as well, to just pay attention to the wicks. Like when we get wicks to the upside, we go down. Wicks on the bottom, sort of consolidating. More wicks on the upside, we're going down, and so on. So, this is a good little practice as well, to go back in the history, see if you can spot candles that have long wicks on the upside, and just predict what you think will happen next. So you can just press the right arrow key on your keyboard like that, and you can see what candles come up next. And so as we start to see candles on the bottom, what tends to happen, and so on. So it's a good little practice for you guys to go ahead and do that. That kind of sums up technical candlestick analysis in a nutshell, guys. There's lots of different patterns. Like there's the evening stars, so like you get like a sort of a bullish candle, a little doji at the top, and a bearish candle afterwards, and that tends to clue in that it's sort of a reversal. But again, like I said, nothing is 100%. Even like this could even be looked at as sort of like an evening star in Forex. This little pattern here, these three, right? But just because it looks like an evening star, or even if it is an evening star, doesn't necessarily mean that it will reverse. In this case, it did. But don't just strictly rely on candlestick textbook information for making trades. You have to have more confirmations. There's a lot more to it, but definitely get a good understanding of how candlestick analysis works. Spend some time on Investopedia.com. Become familiar with candlestick analysis, because the more you know about candlestick analysis, the better off you guys will be. Okay, so I'm going to leave it there for now. In the next lecture, I'll be talking about spotting trends.